The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off, 9:06 a.m., 24 minutes to go until the start of trading. And you have markets trading higher yet again, 67.05. We open the markets right now up 12 points. Shouldn't say open, but futures higher across the board. S&P's up by 0.2% or 12 points in the positive. NASDAQ 100, we're up by 0.2% or 40 points in the green, 24,745. You get the Dow up about 0.2% as well, 84 points in the green, 46,600. And the Russell positive by 6 this morning. Bitcoin trading slightly lower from the highs of last evening. You were up above 118,000 yesterday. You're at 116,285 for Bitcoin. And you jump around in terms of where we are right now when you talk about yields. The dollar, the Fed in focus, of course. You take a look at the 10-year. When we just hit new lower price, higher yield. Yeah, you're talking about 112.22, okay? And that puts the 10-year yield at approaching 4.14. We're at 4.133. 4.14. We were at 4.04 coming into Fed Day. You have lower price, higher yield since then. The dollar continuing to rise. We hit 97.80 just moments ago in the dollar. And with a stronger dollar, gold holding up relatively well, actually. Right? You see the way the dollar has pushed to highs. Gold 36.78 right now. Gold flat on the session. You jump over to silver, up by 21 pennies at 42.33 right now. We jump over to the volatility index, 1537 in the volatility index. All right, you jump around to some of the action. FedEx with their numbers last night. We'll get into it. But yeah, how about that for some volatility, man? Up to 244. And this morning, we're backing off. And you're almost right back to where we were yesterday. Quite the acceleration and the rebound to lower prices from where we were yesterday. You jump over to Intel shares. You get the acceleration yesterday, of course, on the news that NVIDIA is investing $5 billion in them. And then you get a downgrade this morning to sell from neutral, from Citi, saying the stock is pricing in success in its leading-edge foundry business that it believes has minimal chance to succeed. Citi. Hey, doesn't Citi know that they're talking about the company that the government owns, and they're talking about a recommended sell? When's the wrath going to come down on them? Half in jest. But, yes, you jump over to the home builders. So, Lennar. Uh-oh, watch out. Last night they reported as well. And, yeah, weaker than expected third quarter revenue. Company posting $8.81 billion versus the $9 billion the market was looking for. Earnings, top estimates. But, yeah, they missed the number, man. And, you know, part of me on these home builders, folks, says, man, you know what? Maybe we got to test it one more time. Maybe, we have yields rising right now. You have the dollar rising right now. A lot was factored in. Maybe the market got slightly ahead of itself. The rate cuts are coming, but are we getting 4 to 5 by March? Maybe not, right? Not from where the market's reacting right now on the heels of the Fed meeting. Lennar, we're going to open at 128 right now. So you're coming down to the lows of August 21st, about a month ago. You jump over to some of the other home builders on that news. D.R. Horton, down a few dollars to about 166 right now. You jump over to KB Homes, down about $1 to 64. Some of the equities moving. You jump over to Apple. On the flip side of that, they get an upgrade. Yeah, JP Morgan hiking their price to $280 from $255. Apple's new slate of iPhones, strong demand on early sales across Asia. So that's number-based, early sales. Take a look at Apple on the daily. So you're going to open about 240. That's where we were peaking out just a couple weeks ago, September 5th. You take a longer-term look at Apple shares, and yeah, you get the high out there at 260. Jump around. Take a look at some of the other Magnificent Seven. Amazon, higher by about $1 in the pre-market to 232. We jump over to Tesla shares this morning. Trading up $5 to 421. NVIDIA, the big dog, down about $1 to 175. Jump over to NVIDIA, man. Quite the company. As in, we are now at almost $4.3 trillion. $4.3 trillion. The 0.3 is a $300 billion company, right? The difference between $4 trillion and 4.3, $300 billion. The size of this company, man. You jump over to Intel shares this morning. Yeah, basically flat. Okay, so no real pullback on the Citi downgrade. You see a little bit of volatility this morning with the markets. And you jump over to Intel, $141 billion company. What's remarkable is, I said it yesterday alone, right? NVIDIA investing $5 billion in Intel had NVIDIA's market cap yesterday had an acceleration, okay, because you traded up almost $6 yesterday, was the entire market cap value of Intel, to put in context, right? NVIDIA's share price movement yesterday alone is enough to encompass the $150 billion market cap that is Intel. It's a $5 billion investment. We'll see if it plays out. All right, this one's an interesting one from Bloomberg. It's out last night. I was reading it this morning. Looks like they updated it about 7:45 this morning. I think I read it before then. But the Hedge America trade fuels global rush into short dollar wagers. Now, the gist of this article is that American exceptionalism is alive and well when you talk about our markets. But what may not be alive and well right now is our dollar. And so what you have going on right now is you're hedging America. Yeah, and here it is. Exceptionalism in American markets with a twist, avoiding exposure to the greenback. So you want to have all the action in the markets. You don't want to have the action when you have the dollar going from 110 to 97 over that time. And how much is it costing to hedge that dollar? Well, it's getting a little bit cheaper. A fresh wave of dollar hedging could ultimately tally $1 trillion. Hedging levels who own more than 30 trillion of U.S. equities back to where they stood last decade. So it's almost normalizing after a heck of a run for the dollar. And when you look at the hedges, this is the annualized 3-month hedging costs against the U.S. dollar. It's annualized. It's a 3-month cost. And when you look at the euro, almost just 2% is your hedging cost. Folks, that's not that bad if you really think we still got problems in the dollar. I mean, I think we could be going down to 90. That's a 10% hit in the dollar still. And I'm not talking about tomorrow, okay? There's a lot factored in. That's why we're seeing a bounce on the heels of the Fed, okay? Talk about a head fake on Wednesday, driving down to 96.21, right? Yields going lower. Boy, remember these days, folks. It happens so often, okay? You come into Fed day. The market knows that they're going to cut tremendously. You get one final exhaustion, and boom. The market says, no, we already knew that was happening. We're actually going to have yields rising on the heels of a cut. We're going to have dollar strength on the heels of a cut. But guess what? Longer term, folks, I got to go back even further. It's your 5-year weekly. 90's hanging out there, man. We're trading at 97.63 in that dollar. We're coming back, folks. We'll take a look at some equities. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks, and check out that weekly on the S&Ps. Okay, and take off that arrow right now for a moment. That was alluding to a daily, but you're talking about a run from the lows of October 2023. As I talked about, check out the biggest bar, aside from these low bars you had at the bottom of April when you got the 90-day reprieve on the tariffs. That was your biggest bar. Now, not the biggest volume bar, okay, but you take out that high. You do it with volume, you do it with price spread, and we're right there, 68.90. That's 190 points. Now, you start bumping up against that, and it's a pretty remarkable one-to-one, A to B, C to D. If you would have told many investors, right, that you'd be pushing 7,000 from the 4,800 price point in April, whoo, and that's where we're pushing right now. You jump over the NASDAQ 100, even a little bit further to go to get that one-to-one. You're talking about almost 3,500 points. Nonetheless, you get the same breakaway on a weekly basis. June 23rd, you break out. You do it, you break above the highs, because the highs were actually this low. Low volume bar, that is. So we got action right now. All right, jumping back to the dollar. So what's interesting is, right, Bloomberg says here, because this one caught my eye, you got to go back the 5-year weekly to see the run to 90. That's how long we've been propped up in the dollar. And not propped up, but that's how long we've been trading above, okay, where the next trend could lead us to. As in, you take a look at the dollar, there's your 5-year weekly. It puts things in context to say, wow, okay, there's a real possibility here we're going lower. You cut this to a 3-year weekly, and you say, man, we're pushing the lows that we haven't seen in some time. And yes, that's true. Okay, you spike to that low, we've caught a little bit of a lift. Then you back it up even further than that, right? And the 5-year weekly only encompasses this pullback here. You look where we are right now. And going back to 2002, the only time the dollar's been actually stronger was briefly in 2017 and on your COVID acceleration and where we were earlier this year. There's a real risk here, folks, of what happens at 90. Because check this out. Okay, 90 doesn't get much more important than that technical area. You got lows out here from 2018, lows from 2021, and then you also have the highs from 2010 when you got to 87, let me get it, 88.70. Okay, so within about $1.30 and 90 there. In 2009, you got within 38 pennies of 90, and you have this chopper out here. 90 is going to be an important area. Maybe that's where you catch a bounce. But that seems to be where this chart's saying we're going right now, folks. What's in the way of this thing testing 90 right now when you think about the fact that lower rates are coming, pressure's going to be on the dollar, and we're trading right now where there's a lot of pressure to the downside. And gold, one of the heavy benefactors, obviously, as we reach 37.44 on that Fed spike, and we backed off a bit to 36.86 right now. But yeah, that's the trade going on right now. So keep that one in mind as, you know, our markets are pushing all-time highs, but Steve Rhodes, and he's on vacation this week. He's coming back next week. I mean, I love how he always breaks things down in currencies, right? And you take a look at our markets in dollars, yeah, we're on fire. Okay, of course we're on fire, though. Do you know who really was making a lot of money? Buying the markets, hedging the dollar, right? Whew, what a trade. Especially when you look at how little it cost you compared to the move that we've already had, right? You're talking about if you're hedging the yen, only 4%. Okay, you're hedging the euro, you're looking at 2 to 2.5%. The Canadian dollar, under 2%. And to hedge the Aussie dollar, 0.6%, 0.5%, something like that. And yeah. So the dollar facing some real weakness. And guess what, folks? Do you know what we pay our future debt in? Dollars, right? Not a coincidence how things occasionally work themselves out. And that is one of the ways of devaluing the dollar, okay? To ease the future burden of those debt payments. All right, we jump around to some equities. You got Uber right now, slightly in the green. You had quite a lift earlier in the week. Lift, right? No pun intended. 26.75, that was on the news. They got a deal going on with Waymo. That was Wednesday. And that's when you saw the hit to Uber on Wednesday. Uber clawing back some of those losses. We're a little bit higher. Jump over to Netflix shares. Up about $6 to $12.13. I was watching the Charlie Sheen documentary last night. I watched the first episode. Haven't seen the second. Hey, tantalizing stuff for what it's worth. Jump over to Paramount Skydance, up a little bit in the pre-market to 18 right now. We jump over to Warner Brothers Discovery, trading to 18.70. I also saw last night, I just had a little bit of time. You know, what'll happen is, really, I got about 45 minutes or an hour. Maybe I watch a little enjoyable television occasionally. And so didn't have a time for a movie, but for you Warner Brothers, HBO Max subscribers out there, the movie that did just come out is that over the weekend, Superman is out on there, and I plan on checking that out. Haven't seen it in theaters, but yes, Superman now available on HBO Max. I saw that one last night, and I plan on checking that one out over the weekend for sure. All right, we jump back to that gold contract. Let's take a look at the daily on some of these gold actions. Yeah, look at this selling the last couple of days, all right? So you got quite the acceleration on September 2nd. Remember, that was the Tuesday after the Monday we came back from Labor Day. And look at the pickup in volume. Now, this is a Fed day, of course, right? But that is some volume on the gold contract. We check out the weekly, and that number hasn't come in yet. You jump over to silver right now. Quite the selling a couple days on silver. You get a little bit of a bounce on lighter volume yesterday. Keep your spikes up in this gold market, folks. Jump over to copper. Yeah, I mean, any day you get a huge swing in the currency markets like we do on Fed Day, right? All these commodities catching some action. We had a dollar bounce, dollar strength. Copper trades a little bit lower. We're trading at 461 right now for copper. All right, look at these markets. The S&Ps are up 30 points from where we were at 3 a.m. We're coming into the opening bell with the S&Ps up by 0.3% or 18 points in the green, folks. NASDAQ 100 up a similar 0.3%, 64 points in the green. The Dow 0.3%, 155 points. The Russell 0.3%. That's how we're coming into Friday open, folks. Markets in the green. We're coming right back for the opening bell. I'll be right back, folks. Don't go away.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. You got the S&Ps right now up by 11 points. NASDAQ 100 up by 70. Markets in the green. And we'll see where the day goes as we hit that opening bell. When we talk about Fed cuts, so Mr. Kashkari, 2 more cuts given the hiring slowdown. I believe the risk of a sharp increase in unemployment warrants the committee taking some action to support the labor market in an essay published on his bank's website. Bank of Minneapolis, that is. The central bank should not be on a preset course for a series of rate cuts. He said he would support holding the policy rate steady should the labor market prove more resilient than it currently seems. I mean, this is normal stuff, right? But he's telling you it does not seem that way right now. He's saying if the data changes, we don't need to be on a preset cut. But boy, it's pretty strong to come out and say 2 more cuts. The jobs market demands it. So much for 2%, right? So much for 2%. The cuts would, quote unquote, keep the labor market from falling dramatically while it takes time for the underlying inflation dynamics to play out over the course of the next year or two. So they're just going to give it a lot of time. They still think that inflation is going to come back down by the end of 2027. Okay. And they're willing to take their time to make sure the job market is not hurt too harshly. And there we go. Now, the other thing, of course, going on this morning is the call underway between Trump and Xi. What's going to happen with TikTok? Who's going to get the action? Is the government going to get a stake? What's going to play out? We will find out. But that call underway in a discussion that promises to determine the fate of TikTok. Yeah. Began at 8 a.m. So I'm not sure if they're still going right now. But nonetheless, look for some headlines there. We jump over to Oracle shares, potentially in play. Oracle up by $3 or 1% right now. Amazon slightly in the green. You check out Apple with the upgrade that they get, up by 1.8% right now. You jump over to Google shares, up by 0.5%. And Meta, up by 0.8%. You know, I was watching some videos on those Meta glasses last night, folks, and boy, I think Zuckerberg's onto something longer term, folks. I really do. You know, it sounds futuristic and a little bit nerdy, but the wristband that he has that allows you to control everything with your hand, it was a remarkable, and people are going to get made fun of for using these things and signaling, and it is the future, folks, okay? They've got a wristband that basically allows you, as I'm snagged a bit, that basically allows you to just communicate with the interface by using finger neural band is what they call it. And then you factor into it, right, that AI is going to be interwoven into everything. And AI is absorbing everything you're seeing and able to give you real-time assistance, right? Imagine how many things you might miss in a day. Imagine if you're a trader scanning a screen. Imagine you're scanning a room. Imagine you're playing. You know, there's so many things that I was like, man, this is going to be a real-time interface of AI. And you get the most out of AI depending on what you input into it, right? There's all these things of what's the input, what's the best way to prompt an AI, right? What is the best way to prompt an AI? That's an important component when you're trying to get the best data from an agentic model. You're not going to have to do that when you're wearing glasses, right? AI is going to absorb everything around you without you saying a single word and give you real-time feedback. Now, you can like that or not, and I understand why you may not like that, right? Absorbing everything around you. But watching it and then watching the 3D interfaces, everything is going to be spatial 3D. So the app generation of 3D spatial AD, 3D imaging, and that's how everything's going to be captured. That's how everything's going to be displayed. And that is going to be the next generation of apps. The 3D interface of augmented reality at the same time they're pulling. The videos are astounding. Check them out, folks, because, you know, I'm not buying Meta glasses just yet, right? But, yeah, I mean, to a certain degree, right? Imagine that you're wearing these AI glasses, okay? And AI, I mean, imagine this, right? Check this out, okay? You're wearing these AI glasses. You're allowed to wear glasses at the poker table, folks, okay? I don't know if you're allowed to wear AI glasses, and I expect that they're going to make these ones illegal. And imagine, now everything can be used against you, okay, as in, but imagine that these AI glasses are watching every single person. They're able to hone in on somebody's heart rate through a beat on their blood vessel, okay? And you can get real live tells from AI, almost like a spy movie, right? Watching everybody's heart rate, at the table from these glasses. Imagine that. Not far off, I imagine. Okay, if they're able to 3D and they're able to see your pulse in any way, you could see everybody's heart rate around you. I'm reaching. Those glasses don't promise that, but they're not far off when you think about the fact of 3D video, right? 3K video, and then AI digesting that 3K video in live. And then you tie into the neural band. So what do you have? Phones are going away. We're going to have an augmented reality glasses that will show your interface, and to communicate with that interface, that's going to be the next battle, right? Whatever it is. But boy, interesting to see it in real time, and you're going to see those next bevy of 3D apps because they're coming, folks. Yeah, and it's the AI that's going to drive it, okay? A live, in real time AI always saying to you, hey, you just missed something. You know, can you imagine you got a voice in your head, you're walking past something, and all of a sudden the AI voice says, hey, we just saw that you passed up an opportunity. Maybe it's scanning stocks, maybe it's scanning whatever it is in your business, right? And it says to you, you missed this easy opportunity. Maybe you're writing something. Imagine you're writing something, and it's just constantly scanning anything you're writing. Maybe you're doing it with a pencil. In live real-time AI assistant that's basically seeing everything you're seeing, whew, it's an endless opportunity. And this is somebody that's not heavily invested in meta folks in any way, but watching that video and seeing the neural band in particular, we're all going to be wearing glasses and talking to those glasses. The interface is just going to be, that's the next battle. And he's on to the fact that people want to be able to talk. I mean, hey, what's that movie with Tom Cruise, right? Where he's wearing the headset and he's just sliding everything left and right, interfacing with his hand. We're basically there. Not quite, but almost. All right, let's keep our eye on yields this morning. It's Fridays in the gold market, folks, as you know. A little bit of a bounce right now. 4.13 is where we are on the 10-year, and you jump over the dollar, 97.61, and we jump over to gold right now at 36.88. All right, Russell negative by 6. Yeah, we get a little bit of a sell-off in the Russell, but boy, it has been quite a run on the Russell. You rise above where we were late last year. And, you know, we've been building cars, you could say, in the Russell for, what, 4 years? 4 years plus. You're finally breaking above. We had highs of 2021 of 2460, 2477 last year, and we're trading at 2480 in the Russell. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got S&P's up by 10 points right now. We're almost 0.2% in the green. NASDAQ 100 up by 74 points right now. Russell and the Dow barely in the red. You jump over to FedEx on their numbers, up by 1%, but well off where we were at 245 on last night's beat. You jump over to NVIDIA shares, holding on to the gains of yesterday, up another 50 cents. 50 cents is $12.5 billion in market cap for that equity. Amazing, right? I mean, imagine. This equity only has to go up 20 pennies to pay for a $5 billion investment in Intel. That's how much that equity is worth. $4.3 trillion is the number that's approaching. Apple getting a lift today, backing off from the highs, but still up by 1.2%. They got an upgrade. Amazon up by 0.6% right now. Google in the green barely. And MetaShares up by 0.4%, but we just hit 790. You jump over to Oracle. Okay. They're getting ready. Did we just have something happen? Let's see. No, not yet. But Oracle, particularly volatile recently. They're in play, of course, for TikTok as that call began at 8 a.m. Jump over some retail. You jump over to Walmart shares. We spike on that Wednesday acceleration of 106. We're back slightly in the red this morning. You jump over to Target shares, down by almost 1%. There's some sell-off for you by about $1. We talk a little bit of Apple. So, Apple's got the new phone. I'm considering getting this one myself. I'm going to let it play out, as in I'm going to let it come out, right? See the reaction, because I thought I had to get a 16, and here we are a whole iteration later. For the past 4 years, Apple customers have been waiting. I'm not the only one. I feel like there is a pent-up demand here for a fresh design before buying a new iPhone, the Pro Max, and the iPhone Air. Now, I'll tell you, battery is life, folks, okay? And I'm just not willing. I want an iPhone Air. They look sleek as heck. That is a new deal. I'm not willing to sacrifice the camera and the battery for a little bit of a sleeker design. I'm not. They have to get it done in the same way, and it's not quite there yet. But they got several new iPhone designs, early sales across Asia, as we talked about, strong demand for the Pro models, and that's probably what I go with. I use it so often, folks, that, yeah, iPhone 17 Pro Max. I'd either go for the 17 Pro Max myself, or I'd go for the Air. 4 weeks is how long you got to wait for that Pro Max, though. And I encourage you folks, if you're thinking about it, to wait, though, because, man, the hype was so crazy for the 16, and it came out, and everyone's like, nah, it's not that special. And the same thing could happen on the 17. The camera's remarkable. There's advancements for sure. But those advancements are hard to come by when you talk about the real-world application of your own life and spending, $12, $13, $14, $15, almost $2,000 for an iPhone at this point. And they talk about the underperformance of Apple. Well, maybe we're going to see some catch-up on this cycle. And what do they talk about in here? Battery and camera. It's almost anything. It's almost like all we care about right now. It's only $100 more than the iPhone 16 Pro. Okay, then you get the Max in there as well. The Air, $999, thin profile, battery life, audio, and cameras. It's the three most important things people care about. Now, people are going to go for the sleekness because, they're going to pop. But I'm not willing to make that sacrifice. But for the first time, again, I'm really looking, and I'm at 5 years right now in terms of where I am on the update of a $2,000 phone almost. All right, we talk about some of those FedEx numbers. So, net income was $30 million more than they thought. $820 million versus $790. Excuse me, a year ago it was. Earnings, though, $383 versus $359. Folks, that's almost a 10% beat on earnings per share. And how about revenue coming in at 22.2 versus 21.6? The stock accelerates higher. Revenue growth 4 to 6% compared to 1.2. It's a big number, man. 17 million packages a day through its network. But they're dealing with the de minimis exception, of course. Slightly raising shipping fees. And a lot of the headwinds they face was due to the loss of that de minimis exception. I would expect so. Significant portion of our de minimis volume exposure previously came from China. All right, we jump around. Tesla catching a little bit of a lift today. Let's take a look at Tesla shares right now. So, we're approaching an area that has been resistance, folks. Doesn't mean it's going to be, but you go back to the highs in 2011. That's an area that we briefly peaked out above for only a period of about 4 to 6 weeks at the beginning of the year, and we're back there. The other way to say that, though, is that you are now in a flat position for the last 4 years. And you know what that coincides with? When Elon bought Twitter. Right? Imagine that. He bought Twitter. I got to pull up the exact date. I mean, he sold right into quite an acceleration. And here we are 4 years later. And now he owns Twitter that's probably at a higher valuation than it was. And meanwhile, his Tesla shares have been stagnant. Was it on this run? Yeah, it might have been on this run. Let's see. Yeah, April 14th of 2022. So somewhere around that 350 area. Insiders, right? How insiders are trading. Always an important fact. And he is a brilliant person, folks. And it was on April 4th that he disclosed his stake in Twitter. And there's Tesla. And then you get the slide. Quite a market timing event. You look at the run-up that they had going into that. Right? This was where Elon said, hey, I'm going to take some of these shares that I got here, and I'm going to load them off for a little bit. And here we are 4 years later. And maybe that's been the consolidation. Tesla up by 2.2%. We got one more segment, folks. We're going to talk some volume on Tesla, though. We're coming right back with volume.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P is up by 14 right now. And we jump back to Tesla shares. Okay. Now you take a look at the monthly, firstly. Now we're only in September 19th. Okay. We got almost a couple weeks left of trading. What do we got? 7 trading days left in the month after today. You're probably going to take out what we did in August. We've already done 1.2 billion shares versus 1.6 with that many trading days left. But look at the decline in volume on a monthly basis, right? April, you get the acceleration. The only peak there was you got a little sell-off. We do 2.1 billion in July, 1.6 billion. We'll see how this month comes in. The thing that is, you could take out these highs. Now, we're 60 points above there, okay? But we did 1.9. This is a monthly basis on Tesla. We've done 1.3 coming into 7 trading days left. We take a look at the weekly on Tesla, and that's where you get some strength. But look at what we've done since, right? You get that acceleration from the lows on April 7th. And since then, you got a waning of volume until the last couple weeks when you've really accelerated, and this week's going to do it too. You're going to take out the highs of last week. You're going to do it on volume. And We're not quite over this high of 488, obviously. That was the high from last December, but we got some real volume there. And so it's almost good we're not going to take that out this week because you do not have the volume to take that out. We did 645 million shares on Tesla at that high. We only got 485 this week on Tesla shares. All right, FedEx with a nice little bounce on the open. We're up by $6.50, up 2.8% right now. UPS, yeah, they give it back as well. Look at that. Up only 40 pennies right now for UPS. Amazon shares. You know, I saw another ad. They got another Amazon Deals Day. It's almost going to be Thanksgiving. Christmas. Are you Christmas shopping yet, folks? Amazon wants you Christmas shopping. They got deal days coming in October. Remarkable. Folks, thanks so much for kicking your Friday off right here. Stay tuned. We got our man Basil Chapman. He's in the den. He's getting ready. He's growling. He's prowling for the Tiger Technicians Hour coming up live next. Larry Pesavento coming up this afternoon. I'll be back at 3 o'clock. S&P's up by 4. Basil's coming up next, folks. Have a great Friday, everybody.